Hey, coming to you today from Edgewater Beach Resort in Dennisport, Massachusetts. For those of you who aren't familiar, Dennisport is on Cape Cod. I'm here for the week because why not? So you can see the beach behind me. It's a little bit windy today, so I'm kind of hoping that this works out and my hair is not, it was going to be flying all over the place. But today I want to talk about one of the most common questions I get this time of year, and that is about student loans, borrowing for the next semester. And the most common question I get is, hey, Jack, why would I borrow on a Parent Plus loan at the higher interest rate, which I think for this coming year is about 8.9 with 4.25 roughly percent loan fee. They'll say, but I just saw a email or an online ad that said get a student loan for like 3%, 4%, or something a lot lower. And yeah, that's technically true, but it's probably not for you, probably not for most people. So let's talk a little bit about it. Federal loans really don't have any credit underwriting criteria. Credit score does not matter. Income does not matter. There are a couple of things that they do look at, but not your typical credit underwriting criteria. Whereas private loans, they look at credit score and income. But you also have a lot of choices, such as who the borrower is going to be, whether it's going to be you, the parent, or you're co-signing for your student, what kind of interest rate you want, whether it's fixed or variable, what type of payment you want to make while your student's in school. So either no payment at all, interest only, a fixed amount. Some lenders will say just we're going to require like 25 bucks a month or something, or full payments day one, right? That's while your student's in school, whether or not there's a cosigner release, and also the loan repayment term, typically between 5 and 20 years is most common. Well, in a private loan space, you pick all of those things. But depending on what you pick, and depending on your credit score and your debt to income ratio, that's going to be the rate you qualify for. So if you have absolutely perfect credit and you pick all the factors that are the least risky for the lender, and you have an absurdly low debt to income ratio, meaning you have a lot of income and basically no other debt, then yes, you might qualify for that 3 or 4 or 5% rate. But if you change the features so that most closely aligns with what a Parent Plus loan offers, so you're comparing apples to apples, then your rate is likely to be close to what a Parent Plus loan rate is. Yes, it could be a little bit lower. You might get 8, you might get 8.5, but it could also be higher. And I know plenty of people who say that they ended up with a higher rate, like 9.5, 10, 10.5, 11, 12, whatever the case may be, because it's based on their credit. So don't be fooled by these ads that you might see online or via email, because yeah, again, somebody might qualify for it, but for the most part, most people are not going to, because they're not that perfect unicorn of a credit risk profile. So anyway, I just want to share with that. It is really windy today. It's actually really nice, a little bit overcast. I was in the water earlier this morning and actually wasn't that cold. I did go all the way in. It was very refreshing. I had a great time, but I want to just share this message with you quickly because it is a question that a lot of people have right now. And I want to take advantage of my time here at the Edgewater Beach Resort to film this for you. So as always, stay safe, stay healthy. I'll see you next time.